On this video, I'm going to show you my proven 5-step process to wholesale creative financing deals using my new creative financing calculator that will automatically calculate your wholesale fee so you know instantly if you have a good deal and how much you can wholesale it for. Now don't worry, if you're new to creative financing, I'm going to simplify the process of evaluating, structuring, and wholesaling creative finance deals. So be sure to stay to the end of this video because I'm going to show you how to get my creative financing calculator for free. But first, if you don't know me, I'm Jerry Norton. I make millions of dollars a year wholesaling and flipping houses. And here on my YouTube channel, I show you how to do the same. So if you want to be a flipping genius like me and live your dream life, subscribe to my channel and watch my videos. As a wholesaler, learning how to wholesale creative deals is another tool in your toolbox. As of this recording, with higher interest rates, investment loans are more challenging to get, making it harder for buy and hold investors to add cash flowing properties to their portfolios. For that reason, if you can bring a cash flowing creative finance property with favorable terms and little money down, you will be able to wholesale those deals for a premium. Let me show you how using my 5-step process. Step 1 is to get the seller open and willing to consider creative. Here's how I like to do this. First, when negotiating with a distressed seller and it comes to price, I usually anchor with a low cash offer, and then if they don't accept, I'll counter with a higher paying creative offer. The reason why I start with a low cash offer is because I want to establish a baseline for what I can pay. If the seller wants the speed and convenience of a low cash offer, great, I'll take that every time. But if the seller isn't willing to take my low cash offer, then now I'm primed for offering creative. I'll usually say something like, I understand that the speed and convenience of a cash offer isn't the right fit for you right now. I may be able to pay more, maybe even your asking price, if you would be open or creative on how and when I pay you. Is that something you would consider exploring with me? Now, 9 out of 10 times, they're going to respond by saying, what does that mean? If they own the property free and clear, you could say, there's a common method we do all the time called seller financing, where I would buy the property from you at a higher price, but rather than getting a new loan to pay you in full, instead you actually become the bank for me. The way it works is we would agree on a price, I would give you some cash down at closing, and then the balance I owe you is paid with interest over time, just like a bank loan. The benefit to you is you get a higher price and you earn interest on your loan to me. For me, it's worth paying a higher price because I don't have to tie up the cash or go through all the brain damage of getting a new bank loan. We'll discuss how to determine the terms in a minute, but let's suppose that the seller doesn't own the property, but rather has an existing loan in place, which is very common. The creative financing method used in that situation is called subject to the existing loan, or subject to for short. Now, you would explain your higher counter price slightly different by saying, there's a common method we do all the time where instead of me getting a new loan to pay off your existing loan, I would just take over your existing loan and take full responsibility for the property. Whatever price we agree on above your current loan balance, I would pay you in cash at closing. The benefit to you is you get your property sold and can walk away, possibly with some cash in your pocket. For me, it's worth paying a higher price because I don't have to tie up the cash or go through all of the brain damage of getting a new loan just to pay off your existing loan. If and when the seller is open to creative financing, it's time to look at the financials to see if you can create cash flow and how much cash flow using favorable terms. Creative is all about the numbers. Once you understand the numbers, you can structure a deal that makes sense. And this takes us to my creative financing calculator. Step 2 to wholesale a creative deal is to determine what the net operating income is for the property. Net operating income, or NOI, is the cash flow that is created after factoring in operating expenses. Now, this is done by taking the gross rents minus all of the anticipated ongoing operating expenses. So if you look at my calculator, let's take a look at the rent analysis. Right here is where you enter the gross monthly rent, and these are the different operating expenses. And when you subtract them from the gross rent, what's left is the NOI. Now keep in mind, the property may be used as a long-term rental, or it might be ideal for a short-term rental, depending on the property and the location. My calculator has both options as well as single family or multifamily. So let's take a look at all of these different rent options. Let's say that the deal you're looking at is a 3-bedroom single family home. Under the unit mix long-term box right here, you would put 1 unit and the monthly rate of, let's say, $2,500. Then right here under gross rent, you would carry that over and put $2,500. If you don't know what long-term rents are, Zillow has a free rent estimator tool that you can use. On the other hand, if you think it might make a good overnight rental property, then under the unit mix overnight box, you would put 1 unit under 3 bedroom, and ADR stands for average daily rental. And let's say that the ADR is $250. Under occupancy, you would put the percentage of days during the month that the unit is projected to rent. So in this example, let's say 60%. With that information, it automatically calculates the adjusted daily rate of $150, as well as the gross monthly income of $4,500. Now, the best way to determine the ADR and occupancy rates for overnight rentals is with a tool called AirDNA. So if you decide that overnight rental is the right use of the property, then carry the gross income of $4,500 over to the gross rent box under the rent analysis right here. So that's looking at the rent options with a single family home. Let's do the same comparison with multifamily. Let's say that the property you're looking at is a 4-plex apartment. Under long-term use, 2 of the units are 1 bedroom that rent for $700 each per month, and the other 2 are 2 bedrooms that rent for, let's say, $950 each per month. That would make the total gross rents $3,200 per month, so you carry that over to the gross rent box under rent analysis. And if you wanted to run the numbers for overnight on a 4-plex, let's say that a 1 bedroom rents for $150 as an average daily rate with a 50% occupancy, and the second units rent for $150 ADR with a 50% occupancy. The gross monthly income would be $7,500. So you would carry that over to the gross rent box under rent analysis. So now that we've established the different ways to calculate the different income options, let's talk about operating expenses. Every property is going to have property taxes and insurance, but the operating expenses based on what type of rental is going to depend, varying on whether it's a long-term rental or an overnight rental. But as a general rule of thumb, operating expenses for residential use typically range from 30 to 40% of gross income. So right here you can see that the NOI is $1,746, which is 70%. That means the operating expenses are 30%. Once you've established the NOI, step 3 is to determine the debt service. Now, debt service is the cost of financing. Remember, creative financing is all about leveraging existing debt or creating new debt from the seller's equity. The cost of financing for the debt service varies depending on the loan amount, the interest rate, and the length of the loan, and so on. This is where the majority of the creative part comes into play, because depending on how the debt service is structured is going to determine if you have a winner deal or not. You'll see what I mean as I use my creative calculator in a minute. Hey wholesalers, if you haven't heard of PropWire, it's the best thing to happen to real estate since Zillow. Basically, it's a free website where you can search and download an unlimited number of motivated seller leads absolutely free. PropWire's database of 157 million properties includes vacant houses, pre-foreclosures, absentee owners, REOs, auctions, empty nesters, high equity properties, probate, tired landlords, and more. Plus, they have MLS listings and a keyword tool that finds distressed properties on the MLS for you in seconds. Oh, and one more thing. If you're a flipper, a buy and hold investor, or even a real estate agent, PropWire has the data to power your business too. Check it out at joinpropwire.com. Let's start with seller financing, and let's say that the seller wants $175,000 for the property with $10,000 down. And let's say that there's an agent involved who will get paid $5,250. And let's say that the closing costs are going to be $3,500. And let's say that the assignment fee is $17,000. I'm going to come back to how we calculated the assignment fee later. And let's also assume that the property needs $10,000 in work to make it rent ready. That means if I add up the purchase price plus all of the fees to get in the deal, the total cost of acquisition for an investor is $210,963. And since this is a seller finance loan and the seller agreed to sell it for $175,000 with $10,000 down, the loan is going to be for $165,000. That means the cash needed to get in this deal, or what we call the entry fee, is $45,963. Now notice right here there is a line for private money loan number 2. That would be if you used a third-party private lender to fund some or all of the entry fee, but for now let's leave that blank. Assuming those are the purchase and acquisition numbers, now let's look at the debt structure. Right here is the seller finance loan amount of $165,000. And let's say that we use a 5% interest rate over 30 years with a 5-year balloon. That means even though the loan payments are spread out over 30 years, the balance owed would be due at the end of 5 years. So based on the loan amount, interest rate, and length of loan, my calculator automatically calculates the monthly principal and interest payment to be $885. If there was a second position private money loan, this is where we would calculate those payments. For example, let's go back up here and put $25,000 for a second position private money loan. Down here, let's say that there's a 10% interest only payment. So there's no amortization over 30 years. And let's say that there is still a 5-year balloon. So that monthly payment would be $208, bringing the total monthly debt service to $1,094. But for now, let's get rid of the private money loan of $25,000, making the monthly debt service $886. So is that a good debt structure? Well, it depends on the net income. That takes us to step 4, which is to calculate the cash flow. Now take a look right here at the cash flow analysis. It shows the NOI of $1,746 and the debt service of $886 for a net cash flow of $861, which is pretty good. So remember I said that the creativity is in the debt structure. Well, watch what happens to the cash flow if I change the interest rate to 3%. That made the monthly payment lower, which increased the cash flow to $1,051. Let's say I change the interest rate to 8%. That made the payment go up and brought the cash flow down to $536. And let's say that I leave the interest at 8%, but I change the length of the loan from 30 years to 50 years. That made the payment lower, which brought up the monthly cash flow to $626. So as you can see, using my calculator, you can manipulate the numbers to create a favorable deal. Now let's put this back to 30 years and 5% interest, giving us $861 in net cash flow. Assuming the seller were to agree on these terms, step 5 is to calculate your wholesale fee. Now the question everyone should be asking is, how much can you wholesale this deal for? Before I answer that, I want you to put yourself in the cash buyer's shoes. What would be your biggest concern when looking at this deal? Well, I can tell you, a cash buyer is going to care about the entry fee, in this case $46,000, and the monthly cash flow, in this case $861. Now obviously the lower the entry fee, the more desirable, but I found that as long as the entry fee is under 25% of the total acquisition, you won't have any issues finding a buyer. In this case, the entry fee of $45,000 is 22% of the acquisition cost of $210,000. By the way, the annual cash-on-cash return on that $45,000 entry fee that is creating a $10,000 annual cash flow is 22%, which is amazing. So the cash outlay with the entry fee, that's in check. So how much will an investor be willing to pay for this deal? Well, as of this recording in today's market, you can get $2,000 for every $100 in monthly cash flow. So if the net monthly cash flow is $200 a month, you can get a $4,000 wholesale fee. With this example, $861 in monthly net cash flow would get you a $17,000 assignment, which my calculator automatically calculates for you based on the adjusted cash flow. And there you have it. That's my 5-step process to wholesale creative financing deals. Now you'll notice right here there are 2 tabs. One is for seller financing and the other is for subject to. Let's take a quick look at the subject to calculator. The rent analysis, cash flow analysis, and so on are the same, but the purchase and acquisition looks a little different. So for example, if the seller is behind on payments, there may be a reinstatement fee, but otherwise the overall analysis is pretty much the same. And I do want to point out that the cells in green are formulas, so you don't want to override them or you'll mess up the calculator. Also, I recommend that you save a version as a master copy and then make a new worksheet for each property you analyze. Now finally, if you'd like this calculator, I'll give it to you for free. Just go to creativefinancingcalculator.com. For giving this to you for free, all I ask is that you leave a comment and say, "Thanks, Jerry, you are a flipping genius." Now finally, if you like this calculator, be sure to check out my new cash offer calculator that doesn't require comps or estimating repairs. I did a video all about it, so watch that now, and I'll see you on the next video.